Hello, I'm Bill Beament, the Managing Director of Develop, and thanks for joining me for this short presentation. Develop has just announced what we believe is a game changer for our company. The commercial terms on a $100 million debt facility we have just agreed with Trafigura mean that the production startup at our Woodlawn copper and zinc mine in New South Wales is now fully funded. As well as not having to raise any further equity, the highly attractive concentrate offtake terms associated with the debt facility have also increased the project's NPV by 11% to $728 million Australian. Woodlawn is now on track to be in production by the middle of next year, and the cash flows are so strong. $375 million of free cash flow in the first 3 years alone. And we expect to repay all this debt well within those 3 years. I think it's important to emphasise that this is not any debt provider. Trafigura is a leading global commodities powerhouse. The relationship that we have formed with them during this transaction is very strong and raises enormous possibilities about what our companies may be able to do together in the future. I will now go through a short presentation on what these agreements mean for Develop. I first want to start with the vision that we created as a team 3 years ago. We built a company that will utilise the power of people to produce clean metals and help decarbonise the world. And our flagship asset of our company is our people that develop this vision and the portfolio of assets that we have. We have an amazing network of executives and operational and technical people inside our business. And I'll touch on our world-class capability later on. But it really is our advantage, our competitive advantage, is the people inside this business. And that group of people have been very busy developing our 5-year business plan that we only come out with less than 24 months ago. And it's a hybrid business model of mine ownership in critical minerals and also a mining services division. And there's 5 key pillars that we put out there, and we're ticking these boxes really, really quickly. We've built our world-class underground capability to cater for our assets. We will be one of the most socially responsible and ESG-friendly companies on the Australian Stock Exchange. And a little tick, and this is a long way with today's announcement of Woodlawn's funding, is we will produce some of the world's cleanest energy transitional metals. And this is reflected by the quality of people like Trafigura that want to fund a project like Woodlawn. The 4th pillar is we've got our 3 main projects. We've been very busy the last 2 years understanding the technical and operating parameters of all these projects. We know that our 2 base metal mines will produce in excess of 50,000 tonnes of copper equivalent, and our Pioneer Dome lithium mine around 200,000 tonnes per annum of lithium spodumene. And the other part we've been very busy with shareholders' money for the last 2 years is establishing long mine lives associated with them. We've been in a very fortunate position as a business not to be on the production hamster wheel, and we can actually put the heavy lifting into the technical, operating and mine lives. So we're not chasing our tail when we get into production. And again, this is reflected through by the quality of mine plans that we've been able to present and get funded on here today. And the 5th pillar is our mining services division. We had a goal of setting out to have 2 or 3 contracts, and these assist us on culture, capability to execute on projects like Woodlawn, and cash flow, meaning we don't have to go back to shareholders. And we've got that. We've ticked our 3 boxes on the contracts we have today, and all 3 are running extremely well. On to the asset we want to talk about today, our Woodlawn copper and zinc mine. A little bit of history. We purchased this just over 2 years ago for $100 million Australian. And with that, we inherited $340 million of prior capital expenditure that was sunk by previous owners. On top of that, Develop has spent $60 million on the mine. So all up, there's been $400 million of equity capital that has gone into this asset. And hence reflects why the terms that we got offered today for our finance and offtake are so appealing for the company. But the major achievements of this spend should be outlined. Our key operational team is in place at a managerial, senior management level and operational level. And that's a huge piece of the puzzle of anyone building a new mine in any jurisdiction, is making sure you've got a team to execute. We are wrapped with the team that we have at Woodlawn, and they're a big reason why we got our funding today. During the last 2 years, we grew our resources by 55% with very minimal drilling. It's over 11 million tonne resource now. We increased the reserves by 94% to 6 million tonnes total. We continue our underground development, so we now have the first 2 years of ore production fully developed with all capital infrastructure associated with that installed. That is a huge head start. I've never had that head start in my career with any underground mine. We've delivered a 10-year mine plan, and this all culminated into the release of a production restart study in April of this year that had a pre-tax NPV of $658 million, and most importantly, generated free cash flow of $1 billion over that 10-year period. And on to today's funding and offtake agreement of terms is the world's largest base metals commodity trader, Trafigura, has agreed to commercial terms to provide us with $100 million in debt funding to bring Woodlawn into production. These funding terms are very flexible and covenant light. As part of the debt funding, developers also agreed to a 5-year offtake agreement across all concentrates produced from the Woodlawn mine. And we have flexibility under that agreement to allocate up to 20% of those volumes to a minority partner if we so to wish to sell down a small interest in this project in the near future. Under these terms of this agreement, our treatment and refining charges are materially lower than that we assumed in the April 24 restart study. This has resulted in an $80 million improvement to the project's NPV. And it's worth noting the key terms of the debt that we've been offered by Trafigura. As I said, the debt size is 100 million Australian. The term is 4.5 years from drawdown, and we were given a stunning interest rate. Our interest rate is a 2% margin on top of the BBS 3-month swap rate. The security associated with this loan is at an asset level with a parent company guarantee, but that has a carve out for our mining services division. So I think that's a fantastic result from our CFO, Ben McKinnon. We have a repayment holiday of 18 months from drawdown and then a reduced repayment between 18 and 24 months. Our interest is capitalised 18 months from drawdown. We had a low establishment fee of 1%. And if we want to repay early, we can at any time with 5 days' notice. Again, very minimal covenants associated with this loan. And we have no mandatory hedging required under this agreement, which means we have strong exposure to any commodity price rises in the commodities that we're going to produce. And it's worth noting our debt and offtake partner. Trafigura is a leading supplier of commodities and has a large share of the global base metal market. It manages complex supply chains to move minerals, metals, and energy from where they are produced to where they are needed. It's fair to say these are an amazing counterparty for development. They have annual revenue of around 250 billion US, an equity base of over 16 billion US. They have access to close to 75 billion US of credit lines provided by a network of around 150 banks. In Australia, Trafigura is one of the largest commodity traders for base metals. They provide significant funding for many Australian and international mines and companies. Through its subsidiary Nystar, it has smelters in Australia, which is an attractive option for developers Woodlawn concentrates being based in New South Wales. Securing these debt and offtake terms at Woodlawn, we've established a strong relationship with one of the world's biggest and most influential commodity traders. This stands develop in a very good stead for establishing additional projects or opportunities, including Sulphur Springs and Pioneer Dome. So it's great to be able to update the Woodlawn Restart Study NPV with the updated terms of this agreement. Our pre-tax NPV has increased by 11% to $728 million Australian. Pre-tax free cash flow increases 10% to $1.1 billion. And this updated NPV is based on consensus price forecasts that we used in the April 24 announcement to enable like-for-like comparisons of the two MP results. But as we know, both copper and zinc spot prices are over 10% higher than when this April MP was released. The pre-production capital and max cash drawdown has increased by $11 million to $78 million. And this is due to increase in the processing capital and optimizing the mining sequence underground, pretty much due to the fact we found an extra level in the first production lens that we want to get down and open up before we commission the mill. With this debt, existing cash of $41 million as at the end of June, and a profitable mining services division which will grow cash during this financial year, Woodlawn is now fully funded through to production and cash flow in mid-2025, obviously subject to our final investment decision, which we should make during this quarter. We believe this is the start of what will be a rapid period and significant growth for Develop, and ultimately very rewarding for our stakeholders, shareholders, and importantly, our employees. That concludes the presentation, but before I go, I want to say a massive thank you to my development team for delivering such an amazing outcome for the company, and who are also super pumped to execute on this project. Thanks for joining us today.